Morning, everybody. Market open with Chris Johnson, April 27th, 2020. Let me pull up the chat here so I can see what everybody's saying. Good morning, everyone. Look at Toronto, Canada. Toronto, Canada. I think it's me not having hockey in my life right now. It causes me to not be able to say anything. Actually got asked by somebody, I was wearing a Penguins hat yesterday. Are you missing the hockey season? Just desperately was my answer. Desperately. How we doing, guys? I am hoping that everybody is having a great morning. Hope you had a great weekend. You know what? If you watch the news headlines like I did, there really wasn't anything out there. I mean, there really wasn't much in terms of news headlines. It gave us enough to feel a little bit bubbly. You know how I'm a curmudgeon. I'm just I don't like anything in the market. That's not true. I'm starting to like things in the market, and it's because I sat around and did some reading this weekend, and I have been fighting. Good morning, Rekka, sorry. Reload if you cannot hear. Hold on a second. Let me type that up just so that everybody gets that. Bingo. There we go. So, yeah, I was doing a lot of reading this weekend, and normally I save the weekend for the New York Times and stuff like that, a little bit of relaxation reading, got into some Bloomberg and started getting that feeling of, and you'll see the quote here in just a second, something that's been around for a while, and that is the market can remain insolvent, ... You guys can start filling in the ... in the chat here if you like. I'd love to see how many people pop that up. So Perth, Australia, that's fantastic. Good night, Baton Rouge. I love the reach that we've got here. I love the reach. So anyhow, started reading, a lot about kind of where this market's, and I took a lot of time to delve into the numbers, get back into the numbers and what's going on with this market at its core. And it really is more of the same. Let me pull up today's slideshow for you so we can start looking at that in a second, but it really is more of the same. What we saw for the first quarter, what we really saw drive prices up were very few companies. So in other words, correlation, when you start talking my world, correlation was going down while returns were going higher. And then when the market started going down, everybody went down. It was across the board. It was the Apples, it was the Ciscos, it was the energy company, it was the Procter & Gamble's to some extent. You were few and far between in terms of companies that weren't going down. Now we've returned to that pre-COVID-19 fallout of a fewer number of companies are doing the work. And that's something we need to take notice of. And actually Goldman Sachs did it this weekend as well. I've got a couple numbers for you on that. So we're going to hit that this weekend. Let me show you the rundown here real quickly, and then we'll get right to work. Looking to bring it in right around 9:15 for you so everybody can get started on preparing to work. Andrew, that's exactly what I was looking. Longer than you can remain solvent. I've been putting my heels in, adding to puts. I've been doing this on my personal, and every once in a while you need to let it go with the flow, even if it's just for a week or two. And I think that's the thing people forget. And I'll bring it back to my screen here for a second. You can go with the flow. And what I mean by that is realize that you can't let the tape run you over. And that's what I've been doing in terms of watching that 50-day and the 50-day moving average. And we broke it yesterday and moved below, on Friday, and moved below 40 on the VIX. Now that's a clear sign that, hey, watch out, look out above. But at the same time, how long is that sign for? It happens as we're hitting the first real week of earnings season on the S&P 500. This is going to be the big news. You've got Google, you've got Intel, Microsoft, you have Facebook, you have the largest of the largest that are announcing this week. And if they all don't go well, you won't be fighting the tape if you're looking to go down. But my point is that you have to have that moment where you say, okay, that line in the sand. And that's why I drew that line so much with you last week. 50-day, 40 on the VIX, 50-day on the S&P, 40 on the VIX, 50-day, and we saw it battle out like a couple of third graders in the back on the kickball field. Just a dirty, ugly fight, but we saw that win. That what happened. So it's time to add a little bullish exposure, but to add it sparingly where you're going to get the workout. I've got some names right now that I'm going to share with my Night Trader subscribers after I get off of this call, but you have to be able to let yourself go a little bullish. Remember, bull market rallies happen, and I've been calling this one from about 2 weeks out as being over. We'll probably maybe get another week out of it, but they can happen. It gets worse when they come down. I think that's why I've been afraid of trying to position you cautiously. That's why those hedges make so much more sense. Gives us a little more freedom to actually go after a couple of runners. So anyhow, stocks rally on reopenings. And what I mean by that is the news over the weekend was so positive on reopenings. Italy's starting to reopening. Germany's starting to reopen. France is starting to relax. Everybody's relaxing and letting people get out. Stay bullish Zoom, Daryl. Stay bullish Zoom. Buy it on its next pullback. Set in a limit order at 130. I shouldn't be doing that. I shouldn't have let the shiny objects. Gerald get the best of me right there by asking about Zoom. So anyway, we're getting a lot of headlines about reopenings, and we knew these were coming, and they're making everybody feel good because they showed the beaches in California where people have gone back to the beach because they've got a heat wave going on already there. Jacksonville in Florida, they opened up their beaches. Things are starting to feel like, oh my gosh, they could get normal again. And at the same time, we still have states like in the state of Ohio that saw a large number of increases in the actual announcement of people getting the disease, COVID-19. We didn't have as many deaths. Those are going down, which is great, but it reminds us that this is something that we're going to have going on through the rest of the summer. And at the same time, we're seeing companies like Regeneron that was using one of their AR drugs to help figure out whether or not they could use it in a study that was going to help people with COVID-19 get over those asthmatic or those pulmonary problems that you have with COVID-19. They said this weekend it's not working. They're pulling. So we're going to see other news of these companies that are pulling back and saying, okay, this drug combination is not working. So it's not over. It's kind of going to be weird. And the thing that's going to bring the market down is going to be the economic outlook and the combination of this earnings season and next earnings season as it comes into play. And that's why we hold those hedges on the market. So jumping back into it, oil starts its decline again. We've talked about how oil has not seen that real cut in production. The cut in productions are going to start coming this week, May 1st, right around the corner. But oil is starting its slide again. We got a dead cat bounce in oil. We're going to take a look at the chart, how you can trade that. This week's earning, the real earnings season starts. I'll show you the breakdown of the sectors, which sectors see the highest focus or concentration of earnings this week, 3 stocks in the headlines from this morning and how you should be trading them, and then the overall view of how you should be trading the market this week. So let's talk about the rally on reopenings. Last week's rally was driven by traders getting ahead of the reopening announcements. Everybody was told we're going to start to see some rules coming out. Florida and Georgia started to do some reopening. Ohio's making an announcement today on Monday that what they're going to allow. And in some cases, it's going to be very small things. When you look at Georgia, it's kind of interesting. The businesses that they opened up in Florida, tattoo parlors, nail salons, bowling alleys. You can get your hair cut, which I need very badly. But I'm not going to drive to Georgia to get it done. I'm going to go down and get a pair of clippers at the Target myself here soon. Nonetheless, these companies or these businesses, small business, small revenue, small impact on the tax, it's kind of a get yourself out and feel good type of group of businesses so that people can feel better about being outside. It's not going to the doctor's office. It's not buying a car. It's not going to a retail store that's just reopened. It's these little things, the small things that we've been hoping for. It's ironic that I actually play in a bowling league, a bunch of old professional guys that do it just for fun because it's fun, physics and velocity and all of that coming into play. But now we play cards online, so we've gotten around it. But nonetheless, they were openings that were made to make people feel better. Look for more of that, which is going to be not as much of an impact, because it doesn't really get down to businesses reopening. Now in California, one of the news items I saw this morning is Tesla is actually asking their employees if they want to come back to work in their factory. Obviously, Elon Musk made some comments last month that he really wants to keep everything going because they need to hit. That company is judged so much on their monthly deliveries. So you're going to see some things that are, out of, I don't want to say out of the ordinary, but out of order from what the states are looking to do. But volume remained light, and this is last week. Volume remained light through that rally. If you look at the S&P 500, if you look at the Dow, if you look at the NASDAQ 100, volume continued to move lower. But you still can't stand in the way of a lightly traded rally. It's because stocks are moving in a vacuum. What it does mean, and mark my words on this, folks, what it does mean is when the volume starts to come in again, this market is going to roar. It's going to be to the upside or the downside. I think you might get a little more to the upside here, another week or so. But when that volume comes in and the traders start taking positions again, it is going to roar, and that's the move you want to be in on. This move that we've seen the last week or two has just been a chancy one on its light volume. So there's a reason that I've been very cautious. It is going to roar when it comes back. And that, again, brings me to, it reminded me over the weekend, the old saying, the market can remain irrational longer than you can remain solvent. Andrew snagged that one right away. That's exactly true. The markets, I could sit here and pound the table and tell you that the markets are going to continue to go down, and they will. But right now, they're finding their way higher. There's a problem, and you want to watch things from the macro level. And there's a problem that we'll get to when we hit the news story. But that smaller, lighter trading here is one of those things that kind of comes back and gets you at some point. Here's the chart of the S&P 500. You'll notice right offhand the two things that I always point out to you: the 50-day moving average we closed above. If we get a second day above that today, that finishes that bullish move that I always talk about. I need two closes above it. You got one here, close back below. You got one here. So we're kind of locked and loaded, ready to go in terms of another move higher, because if we get that second is going to be that, that catalyst or that flash point that'll start to take us higher. If we move back below, expect to see the VIX start to pull back towards 40 again. It closed, here you go, right around 38 or 35.93, 36 bucks. You know what? If you were with me on Friday morning, I bet everybody an ice cream sundae that we'd actually see the VIX close above 40 and that we'd see the IWM lead the S&P 500 lower in the afternoon. I owe you, if you want to find a way for me to collect you. You can Venmo me for the $1.50. We're talking McDonald's ice cream sundaes here, not something lavish with gold leaf and stuff like that on it. Anyhow, we did close below 40. This is going to be that second close below 40 as well. So we had a close. Actually, I'm sorry. Today would be the second close below 40. So you want to watch this chart very closely and the S&P 500's chart for the next 8 hours, because we're going to get that, and that wonky noise was my phone hitting the floor, by the way, folks, just in case you wanted to giggle. We are going to get that move either above or the confirmation that this market's going to stay in its current lightly traded direction. We do have a positive open coming, but we're going to, as I said, anything can happen. I feel like I say this a lot here. Anything can happen in that 7.5 hours here. One thing that is going to happen this week. One thing, Paul, I hope you're laughing about my phone. One thing that is going to happen this week is oil looks like it's going to start its decline again. This morning, oil futures were trading down 24%. 24%. Now, we saw last week futures trade up 24 and 25% on almost a daily basis, it felt like. I mean, oil took off on a rip, and we'll get a look at the chart here right now. This is a dead cat bounce, folks. So oil took off, and it's partially because of, they expected the cuts were coming. At the same time, everybody kind of screamed oil can't go lower. We had the craziness with the USO. USO is now splitting. I think it's on Wednesday is the date that it'll take effect, but it's going to have that reverse split that's going to put the price back up into somewhat of a decent range, up in the 15 or 14 area. Yes, there are, Andrew, you are seeing a couple of places now that are taking, actually, not only are they taking the futures off the table, but they're trying to figure out whether they want to let people trade the USO, which USO obviously trades futures. So that's we'll see what happens here over the next it's going to be weeks, not days here. And I'm sure you'll see the CFTC being part of those discussions as well. But oil already beginning to see a price a reversion to their mean. So they're actually reversing hard today. This means the oil sector will be one. There is your typo of the day that tells you that I'm up at 4 o'clock in the morning doing these. The one sector to watch, Diamond Offshore filing for bankruptcy over the weekend. That is also adding to some pressure right now. You're seeing oil service companies that are, and this was seen coming from miles away, but you're seeing oil service companies that are shuttering and now starting to go look at the their reorganization plan so they can move over. To answer Naveed's question, should we buy SCO? I believe SCO here is a good purchase again. Obviously, we grabbed SCO a couple of weeks ago or a little over a week ago. It's still sitting at that 45.10. I think that you get it at this point. When we were talking, we were buying it down around 25, down around here. USO's gone down. SCO does go up, correct? This is an inverse. We got our pop. I mean, I said I'm looking for a move that's going to take us up to the 60, 70 range, and we got that last week when you had the on Wednesday when you had the, I think it was Wednesday. No, it was Tuesday when you had the day before all the USO hubbub. I think you can grab this from 45 and get another ride up to $60 here. It's not a bad trade at all. Keep an eye on this though, because these inverse funds always, and this is my warning to you all the time, these inverse funds come down faster after they make these very fast, aggressive, and in the right direction moves higher. So in other words, they will come down just as quickly as they go up. This is not one where you wait a couple of days to see if you can come in and grab a couple dollars extra. Greed will kill you on these trades with the inverse funds. Same thing with the shorty on the IWM. Same thing with the SDS on the S&P 500, although it's less pronounced than the SCO. SCO, I think you get from 45 to 60, maybe 70, and then that's a time when you want to make sure you're nimble and quick and grab that trade and get out. So let me go back here to 350 on the SCO. That is fantastic. That is fantastic. And I'm glad to see these the profits. Love, if you got a profit on that SCO trade last week or the week before, let me know about it. Throw it up in the chat here. So let's go back to my slide so I can get you finished up and get you ready for trading in the market. So WTI, watch that trade right now. There's your chart of WTI. Notice we hit that 1750, didn't actually get up to 20 where you saw that clear line or that clear consolidation, that floor. And I think right now you're probably going to see that reversal. Made it obviously back down well below 750. You've got room for this to move down. 80% return, that's fantastic. You've got room for this to move down at least I'd say another 50% from where we are now. So this is one of the things that we want to keep a close eye on. The trend is unfriendly here. Boom, boom, boom. Here's your culprit on why we bounced. Oversold. That's why I'm calling this a dead cat bounce, what we saw in oil. They don't bounce much higher because it took off, but at the same time, dead cat bounce, folks. Another area we want to watch, XES. This is where your Diamond Offshore rig, a lot of which is Transocean. That's where a lot of these companies are sitting. And part of the reason you're going to want to watch that is because the energy sector is top on the listing right now for the earnings this week in terms of heaviest to flow. So XES, we're going to watch those and break those companies down. Actually, I'll bring you a couple of XESs tomorrow. Gio asked me another question about SDS. Is it time to get into it? Is that what you're asking? Or I'm not sure what you mean by just the question mark. So this week's earnings get serious. 692 companies with confirmed announcements dates this week. Those are confirmed. So you can see right here, 692 this week, 1996 the following week, 1518 the week after that. These are the number of companies in the S&P 500 that are reporting each week, 134, then 159, and then 23. If we want, I can actually open it up. This is one of those pages on my internal page, that tool that you always see me pull up. We can look and say, okay, what are the upcoming weeks, and nail down right to the sector level on this. And you'll see it'll start to show us exactly which stocks. And if we go and look at the XLE stocks, these are your energy stocks that are announcing this week. You've got ExxonMobil, Chevron, COP, ConocoPhillips, Phillips 66, ONEOK. Watch ONEOK right now. ONEOK's in quite a bit of a little bit of a death spin here. Valero, National Oil Well. So these are your energy companies that are announcing this week. When we look back, and let me go back again, the other big deliverer is going to be technology. 51% of the technology sector announcing this week. 51%. QQQ is the same thing. Watch these two. These are going to give us your next directional move. I guarantee it that they're going to come from this particular area right now. And this is looking at just the tech, Apple, Microsoft, Amazon, Facebook, Google's in here, Pepsi, Comcast, Tesla. I mean, this is a who's who, and we're certainly going to see a lot of numbers that are going to surprise Wall Street. Tech numbers have been good. We might get a little lift, and that's why I was saying if you want to play the trend or play this out a little bit and continue to look long, you know what? If we close above that 50-day and we stay below that 40 on the VIX, I think maybe the technology stocks help to give you the lift. They'll overwash that oil. Oil will get lost in the fray right now. Oil is a short trade right now, though. You might want to make sure you look at that SCO as well as some of these oil service companies. Technology, I think, is going to remain flat to up this week. A lot of the companies, Google, Facebook, they deal with that online ad revenue. Facebook's got a new product coming out that they're trying to take Zoom out. They're going to try to sweep the leg on Zoom with. The fact is, Zoom is already there. Zoom's already got the people jumping in there, and Facebook has kind of a little bit of a rep for, privacy issues, and Zoom obviously does too. But I think Facebook is one of those that people kind of avoid. I know I am a perennial avoider of Facebook, except the marketplace has kind of got me a little bit interested. Anyhow, I digress. Technology, expect that to float a little bit higher through the week. Energy, expect that to move lower for you. There's where you want to focus your split trades right now. And why do I say split trades? Energy, let me hit this real quickly. Energy is the largest reporter, NASDAQ 100. Oil and technology have been the two largest drivers in this non-correlated market, which is where I wanted to go. Sarah, I would not buy XLK. This is one where you start to buy the stronger ones. Naveed, you got to stick with me. You're getting ahead of my curve. You must have got a copy of the script before we went to production here. Boeing is one of my three that we're going to look at and how you trade it. So hold on for a second. Sarah, you want to go look at the strength in these sectors. Another one, Checkpoint, is one that you'll find in the sector that is right now a performer. Obviously, Zoom a performer, but it's not in the XLK. But try to get away from just buying the sector, because you take on some sector risk, and those companies that aren't going to make it through in terms of their earnings aren't going to help power you forward. Look at some individual companies right now, and I'll talk about a few at the 11 o'clock call on Night Trader. So why do I talk about the correlation and how these markets are splitting between tech and oil being the drivers? Well, one of the things I read last night on Bloomberg, Goldman Sachs says is narrow breadth in the S&P 500 is a bad sign for stocks. Narrow breadth, what that means is that you don't have as many of the companies moving in the same direction or at the same momentum. It's basically momentum of the market, or inertia, for all those physics geeks like me out there. We're seeing movement in this market. We're not seeing momentum, and that is a cause of not having the breadth. Breadth is not moving everybody together, which means we don't have a lot of power behind it. So narrowing of the group of winners in the S&P 500 doesn't bode well for the future performance of the U.S. stocks. Basically, what you see happening here, folks, is 5 largest companies making up 20% of the gauge's market cap. And when you look at the NASDAQ 100, it's the same thing. Those stocks that you just saw up on that list that are in the NASDAQ 100, Apple, 11.2% of the weighting. Microsoft, 11.1% of the weighting. Amazon, 8.6% of the weighting. These are the companies that are moving the indices. So when you ask, again, that question, Sarah, should you buy the XLK? I would tell you that you're better off buying one of these companies instead of buying the actual XLK, because These companies are doing all the work right now. And when you get down to the Cerners and the eBays, and eBay's not been terrible, but Seattle Genetics, come on, Align Technology, no. So find the leaders right now, because that's exactly what Goldman Sachs is telling you with that article. Those 5 companies or those 10 companies are doing all of the work. You have to focus on those. Sharp declines in the market breadth in the past have often signaled large market drawdowns. Market drawdown means basically we pull back from this, what I would call it, it's a little too animated to call it a dead cat bounce. The rally that we've seen right now, 26% rally in stocks, that's a dead lion bounce, let's say, or dead tiger bounce in, out of respect for the Tiger Kings on Netflix. Dead tiger bounce. It's a big one. But it's also the last phase of the first cycle of a bear market where we rationalize everything. We're still in the middle of rationalizing things. And that means that as soon as that's done, you hit the second stage, which is acceptance. And that's where we start to really sell into the market weakness. So what do we do with that weekly traded breadth when that breadth is traded weekly? Well, we look at companies that are going to either go against or go for. We either get into those strong companies that have been giving us, and this is where I'm getting to our 3 stocks of the morning here. You get into those stocks that have been polarized by this market. Boeing is one of them. Who was it that Naveed was asking on Boeing? And it's amazing that you were asking, because I put this together at about 6 o'clock this morning, maybe 5:30 this morning. Naveed, the stock was down 6%. It's going to open another 5% lower today. You can see it did this consolidation between 160 and 140 when everything started to look good. Hey, we're going to reopen some of the plants and we're going to start getting things rolling. And then all of a sudden they have to cancel a deal with Embraer. And then all of a sudden, oh, maybe we're not going to see the approval from the FAA come in the middle of the summer, but maybe towards late summer. And they're getting more and more cancellations. People were looking at this stock almost as I was looking at Disney. And I was incorrect with Disney, because Disney continues to move up. But Boeing is going to slip back into this pattern. Obviously, the trend very unfriendly. The 50-day moving lower. The 20-day, we're now below it. Targeting that move back to 100. You get a double bottom on this, and I've said this before, I'll say it again. The double bottom in the technical trading world, technical indicators and patterns, the double bottom is the most powerful and the most reliable technical pattern that a stock or the market can follow. That's why I want to see the March lows in the S&P 500. If I saw Boeing come down to $100 and touch down on $100 and start to reverse again, I'm going to be buying Boeing at that point. I'm not buying it now. I'm actually looking at a short on it. So Boeing, bearish, target 100. You turn into a buyer at 100. If you just want to be a buyer of the stock, put a limit order in at $100 and let it get filled. Slow the mean market down, as I've been saying. Let's go to the next slide. I hope that helps you with the Boeing. I see something here as I'm trying to switch screens. Would I recommend doing a synthetic long buy call? No, I wouldn't. Naveed, I don't think I would. Doing a synthetic long stock, not at this point right now. I think a straight up short on the stock, putting it down to 100, maybe with the 120 if you want to go out of the money, which won't be that far out of the money after the close. And then if you like, yeah, you could sell the 100 put, sell the June 100 put. I don't have my montage open yet for the morning. I'm not sure what they're going for, but you go ahead and you sell the 100 put, and you try to offset that, use a put sell to actually get into the shares at 100. And then obviously you can go back and buy it at 90 if it continues to go down a little further and dollar cost average into it. And Teresa actually points out Embraer is definitely going to sue Boeing. So that's going to be some legal weight that's going to be on their back as well. That news has already been out there that they're going to get sued for breaking this deal with them. Beyond Meat, this is one that what I'm talking about, going with the flow. What do? Something's breaking out. It's breaking out fast, aggressive, and in the right direction here. Beyond Meat broke above its 50-day on Tuesday of last week. And if you could see, we started to see a pickup in volume right here. Folks, this is what I talk about, these trend lines being catalysts, right? So you go above the 50-day, people are getting back interested. Part of the reason behind this was Smithfield and a lot of the other Tyson were closing down, meat producers closing down their facilities. Now, I'll be honest with you. I'm not going to run out and buy some Beyond Meat. I buy Beyond Meat when my neighbor gives it to me. They're vegetarians. They come over with a Beyond Meat burger and we share it and I eat it and it's good. I don't mind it. I don't go out of my way to buy it though. I happen to have a lot of meat in the freezer, so I'm not worried about these processing plants shutting down. But at the same time, I don't have to take part with their product in order to enjoy the profits. Let's go back to the chart. Breaking above 110, it's going to have another big day today. I think you see the stock go up to the 130 level. That gives you 20 points here, about a 15% punch from here. You could use the stock to do that, and you're going to pay for the premiums on this particular option right now. So it might be better to go with the stock, but if you really want to leverage it, go with the 120 calls on this stock, ride it up to 130 and sell it out. And you can even sell maybe the 140s or do the 130, 140 spread. It's up to you. Bullish up to 130 is my target right now. Why is it so short? Well, you've got obviously a history in both January and February of 130 being the top. And you can also see that we had a little bit when we bounced above it. And I'm not going to put this much into light because this is right after it IPO'd. Now you've got some trading trends though. But here's the other one I want you to be aware of. It's overbought right now, registering a 74, I believe it is, a 75 on the RSI. You had two instances in January where it did the same. And when the stock was at 130, we can punch up there. It's going to look like this on the RSI. That's going to be the time to get out of those 130s and move on to greener, more delicious territories. Pun there. Caterpillar is the third stock we're going to cover this morning. Downgrade from Goldman Sachs, downgrade from, I think it was Bank of America as well. And it is right now at a confluence of that 20-day and the 50-day. You can see it's been wrestling with the 50-day that's been moving lower. Folks, this comes back to are we opening up too early? Do we expect too much? Look at Cummins CMI as well. That would give you another, or John Deere, that'll give you another chart of basically those canary in the coal mine industrial companies. Again, seeing the market in a bifurcated environment. I like using that $3 word today. I'm going to put $1 in the jar for myself. We've got a bifurcated market here where you've got these companies that are wrestling with their 50-day. They're the industrial companies that are saying, hey, we're not going to see as much growth. Looking out over the next 6 months, Cummins Diesel is doing well. You know what? We talked about Vulcan yesterday or the day before, and Vulcan Materials is not seeing as much bullish activity as I thought. And we talked about Trinity, and that was the same. Trinity wasn't doing as well as I thought it would. It's putting in a bottom here. That was basically off the news from the rail car numbers that we saw, where they were shipping much more construction material. And I thought, well, maybe that would be a little bit of give us a hint, put us on the scent of a trade that we could find in the materials or the industrials area. To no avail. I'm sorry, folks. So those are our three stocks for the day. Let me hit the questions here right now. How far for Beyond Meat? I think it goes up to 130. At 130, you need to look to get protective about yourself. You need to either sell the calls or put in a stop limit if you bought the stock. How far out on those BA puts? At 100 or 120. If I'm buying a put on Boeing, I'm probably going to be looking at the 120s right now because I want to get a little bit of that leverage. I'm not going to play the 100. 100 could come in as support because that's where the bottom was last time we hit it. So you could see it come off 100 very quickly. So you might be stuck with a option that's just going to rip off some time premium. SCO trading 55 missed the boat on that one. You know what? I wouldn't look at to go much further than 68 to 70. So you might get a quick poke here over the next day or two. Watch it closely. If you put a trailing stop in on that, you're not going to make it up to the peaks. I guarantee it's too volatile during the day unless you put a 10% or a 15% trailing stop in on it. SCO, look for it to hopefully trade down to some point below 50 today. Let me look at one more view of the chart real quickly here. And remember, they do have those production cuts coming up here at the end of the week. So we closed 45.10, trading 55 right now. Peak last week was 65, a little over 65, 67. You know what? Look at, I would look at the, If you could put in a limit order to get it at 50, you might want to try to ride that. Put in a day limit order to buy it at 50 and see if it goes up from there. But you, again, want to be very quick on grabbing the gains on the top. Still buy, yes, absolutely. Short on XRT, short on the retail REITs as well, Simon Property Group. I am bearish on IWM. It's a trade that's hurting me right now. I have a hedge position on IWM as well. Still on URI as well. Industrials, again, aren't doing well. I'm going to be watching URI very closely. All right, guys, that's it. I'm going to trade it down. I'll give you a quick couple words on how you trade the market. Today is going to be a pace setter. We're going to see how things rattle out with oil. You're going to see the 50-day, whether it's going to stay above or below. Remember, we've seen days where we're up 100 points on the Dow with the futures, and then we'd end up in the basement by the end of the day. Watch that closely today. Tuesday is going to be a day where we're going to see a lot of posturing because that's when the first wave of earnings comes. Obviously, you know, we get bump Wednesday or bump day, I think I'm calling it now. Thursday, Friday. Thursday is going to be a ridiculous one. We get a huge amount of earnings on Wednesday night and Thursday morning. So that's going to be the big daddy here. Position yourself to let some technology and some of those leaders go a little bit higher right now. Energy, oil related, look for those to be making a top right now and rolling over. Industrial companies, watch those very closely. Retail, stay away. Watch some of these biotechs too. They're a little rich. And when you have Regeneron and others coming out saying that the COVID-19 solutions they've been putting together aren't coming to fruition, that's a time when you want to say, okay, they're a little frothy right now because everybody was excited with it. Maybe it's time to take your profits there. That's it. Till tomorrow morning, 8:45, 11 o'clock. I'll see my night trader people here. We're going to keep it short this morning on the night trader. I'm going to take a lot of your questions looking at the portfolio, but I've got a lot of position work that I'm doing right now. So we may be 15 or 20 minutes. Just a little bit of a warning for you. I know that you guys like to go long. I think we did 49 minutes last Friday. So I'm going to take a little bit of that back today. All right. Thanks a lot, everybody. I'll see you tomorrow morning right here on the Market Open. Have a great day.